Welcome to the DSG Podcast, exploring the intersection of on-chain and traditional finance. As a digital securities platform committed to open finance, we bring you insightful conversations with industry leaders and innovators, exploring the evolution of capital markets. Whether you're a finance professional trying to raise capital or curious about on-chain finance, tune in for grounded perspectives on where finance is headed. The content shared in this podcast is for informational purposes only and does not constitute financial, legal, or investment advice. DSG does not endorse any specific investment strategies or provide advice specific to any individual's circumstances. Listeners should consult their own investment advisors before making any decisions based on the information provided. Now let's get started.
All right. Hello, everyone. Welcome back to the DSG podcast. Today, the session is on supporting energy transition, mining Bitcoin with renewable energy with Dr. Simon Collins from Stackr. Simon, great to have you on the podcast.
Thanks,
why
Ryan.
don't you share a little bit with the audience around your background and what you're up to, and what's your passion in the space?
Yeah, thank you very much. I won't go too deep into my background. I won't share my school cert results with you like at a consulting interview. But look, I'm a serial entrepreneur and founder. I can't seem to stop myself from digging in on new ideas whenever they come across my desk. But at the moment, I am CEO and founder of Stackr, which is a Bitcoin mining company, which obviously we're here to talk about today, but also the co-founder of Lightning Pay, which is a Lightning Bitcoin exchange based in New Zealand, but with global aspirations as well. Stackr began in 2020 during lockdown in discussion with my co-founder, Sam, about just how hot the mining market was, my existing experience as a miner, and how we could lever that up and do something interesting and useful in the space, because the Bitcoin mining space was kind of becoming dominated, and still is, to be fair, with really large on-grid miners that don't look or aren't too concerned about the mix of energy that they're feeding their data centers with. And that's led to obviously a lot of criticism in the space about Bitcoin and its energy consumption, or particularly its carbon emissions. What we know about Bitcoin is that's not really a truthful or fair assessment of its impact on climate. New figures from the Digital Assets Research Institute, which I'm also a member of, show that it is actually the fastest greening business in the world. But that's an aside, and we could potentially get to that in the future, but later in the discussion. That was my dog spewing. We might edit that out. Wait, we might edit that out, eh?
Mine's just looking out the window at the rain, seeing his chance of a walk just slowly dwindling.
Yeah. So back to Stackr. So we started Stackr with the idea that we could mine Bitcoin exclusively with renewable energy in New Zealand. And we loved that idea, and that started with a real hiss and a roar. But slowly and surely, the economics of Bitcoin mining tend to turn against you unless you have a real twist on the model. And that's what I think the really large miners are finding now as they chase capital value and growth in a fiat system where they're required to make 3 monthly earnings reports to the market, and finding that the only way to do that is to kind of overcapitalize on their growth, whether or not they have the energy and the energy pricing to make that a successful business. And I think what we're going to see in this market over the next little while is those really large, overcapitalized, and really hard to move companies find the market for energy really, really difficult, because AI is coming for that energy, right? Why would a generator sell you energy at 5 or 6 cents a kilowatt when they could get 20 cents from Google or somebody Chat GPT or OpenAI to fund to power their chat models. So all that to say, we decided after a while in this market, we needed to find a way to attack the Bitcoin mining market from a different angle. And that meant finding several things kind of in confluence. And that was markets where energy was relatively low priced anyway, markets where growth in renewables had been really fast and that there was a lot of renewable energy operating because of whether it's government incentives to transition away from fossil fuels, or whether there was existing renewable resource in that country, whether it's wind or solar or hydroelectric energy, that had been developed into generation assets. And then also a market or markets where the supply of energy was really difficult to transmit. And that often means slightly lower development index countries where government funding to invest in things like transmission, which gets energy from where it's generated to where it's consumed, hadn't kept up with that pace of growth. And so what we have found in several locations around the world, and what we're working on developing now at Stackr, are these opportunities to work directly with generators to monetize what we call stranded or wasted energy or curtailed energy at extremely low prices, but prices that they were never going to see for that electricity anyway. So it's kind of creating a win-win situation for us, obviously, and for the generators, and arguably for those transmission grids, which are struggling under the weight of new capacity growth, to create a business and to create value for everybody in that kind of ecosystem. Because traditionally, and we certainly saw this in New Zealand when we were negotiating with generators, or those are the ones that were prepared, the ones that were prepared to talk to us in the first instance, is that a traditional PPA, power purchase agreement, with a duration of 5 or 10 or 15 years tends to have one winner and one loser. And that's because after 5 or 10 or 15 years, the generator gets to a point where they could have sold that energy for far more on spot markets or to newer PPAs, or the business finds that they can no longer finance or don't have a business anymore and are still locked into a PPA that sees their electricity cost as a fixed proportion of a shrinking margin. We think that that is obviously a horrible model to get involved in if you have a economic model like Bitcoin, where over time your economics sort of slides away until you can re-up your tech stack and recapture higher margins with new hardware. So our opportunity was to look at how we can find places where we don't need to worry about our tech being the linchpin of profitability, right? At the moment, all these really large miners, the reason they're raising heaps through share issues, through stock markets, is that they need to develop their technology, or they need to re-up their technology from the S19 series of Bitcoin miners to the S21 series. So they have to drop, $2,500, $3,000 US per unit on tens of thousands of units to recapture margin that has been eaten away at by other miners who are doing the same thing. So it's sort of an arms race. We see all of those S19s coming off the rack as an opportunity, right? These guys are paying $250 a terahash, right, for this equipment. We're picking up this gear for $2.50 a terahash because it's last generation. So yeah, we're paying a tenth of the price, or even less, depending on what your deployment looks like, for gear that, because we're targeting electricity that may not be 100% uptime, which these guys all really want, but we don't necessarily care about, we will monetize because these machines are still perfectly profitable, in fact, extremely profitable at the prices that we're targeting. We just don't get to be up 100% of the time under our model. So that's the way that we've put a twist on the model. And so now we have several markets across the world that we're looking to develop this as a model. And we have partners out of the United States who are helping us to develop our hardware to put in place there, and working in New Zealand, obviously with DSG, to raise the capital for the construction side of that.
Awesome. And there may be some listeners that aren't 100% sure what Bitcoin mining is. So why don't you give a beginner's guide, maybe just a quick beginner's guide to Bitcoin, and then a little bit about what Bitcoin mining actually means, and maybe a short history of how the narrative behind Bitcoin mining has evolved over the last few years.
Yeah, good idea. So obviously, well, not obviously to those who are uninitiated, but Bitcoin is generally considered the first cryptocurrency. Obviously, there was a lot of development in computer science, cryptography, encryption, databases, etc., that led to the implementation that we see today as Bitcoin. And Bitcoin, of course, has developed, especially in its early days, from a pretty rough outline of what we see today to the kind of refined Bitcoin network and currency that we see today. But Bitcoin is a cryptocurrency with a fixed supply of 21 million. It started in 2008 and has slowly but surely captured the attention of, I guess, different facets of society, from internet nerds and cypherpunks in the first instance, through to a criminal underbelly for a short amount of time, to a kind of speculative and interesting asset, and now to a worldwide reserve asset, an alternative financial system. We now have an ecosystem of development that goes on both on both on the Bitcoin network, but also on second layer alternatives, like second layer solutions like the Lightning Network, which is focused on allowing like instant, fast, and cheap payments. Instant and fast are obviously pretty much the same thing, but instant and cheap private payments on the Lightning Network. And so what we have now is this incredible kind of alternative financial ecosystem that allows people to send remittances around the world without having to go through a bank or go through Western Union. You can now go peer-to-peer for that kind of thing. You can pay people near you, next to you, with Lightning for your half of dinner or what have you. But also you can use it as a savings technology, because with a fixed supply of 21 million, you don't have somebody who can print your currency out from under you and devalue it over time, which is what happens in the fiat system. You have a predictable amount of Bitcoin in circulation, and you know how much is going to be produced in 10 minutes, and 2 weeks, and 2 years, and 200 years. So Bitcoin mining is one of the key parts of that Bitcoin ecosystem. And Bitcoin mining is often referred to as the security part of the network. And that's partly true, but it's also an oversimplification. It is security, because what mining is a bunch of computers around the world, us at Stackr obviously included, but also other participants from mega companies like Riot and Marathon, who are listed on the New York Stock Exchange, through to people who use a couple of Bitcoin miners to heat their swimming pool at home when they need a little bit of extra heat, and everybody in between, mid-sized, large and private, all sorts. And they participate in the network by basically creating a huge wall of computing power that anybody who wanted to inject a transaction that shouldn't exist, couldn't exist, put Bitcoin in somebody's wallet where it didn't belong, or to spend some Bitcoin twice when they had already sent it to another person, you would have to overcome so much electricity cost, hardware cost, and computational power that the value of attacking it that way would be extremely diminished. So it does protect the network in that way. But miners also have another really important role in the Bitcoin network, which is that they order transactions in the block. And that is probably sounds really complicated, but it's actually very simple. Every block is has a certain amount of space for transactions. And anybody who wants to stick a transaction into a block needs to pay a fee to do so. The transaction takes up a little bit of space in the block, a couple of bytes of space, and you will bid for how much you'll pay for that space in the block. And so what miners will do is they'll look at all the transactions that are waiting to go into the block, and they'll find a way to order them so that they get the most possible transaction fees out of the block, because the miner that wins the block or hashes the block gets paid those fees plus a small block reward for winning the race to find the transaction hash. Won't get into what that means. If anybody's interested, they can spend several days Googling and learning about what that actually means. But so yeah, Bitcoin mining has a really important set of roles in the space. And that's why it's important for Bitcoin to have a robust and healthy market for this hash power. And so we see that as at Stackr as a really important way it drives us to operate it in ways that are sustainable. Because if we're doing things that make it hard for grids to turn off coal power plants or gas peaker plants when demand is really high, we don't see that as a sustainable practice. But if we operate in a way that supports existing and new renewable energy capacity to both exist, to scale up, and to deploy new renewable energy, then we're accelerating the energy transition and operating Bitcoin and the Bitcoin network as a sustainable entity. And so that's why we have chosen this as a model. Well, part of the reason we've chosen this as a model, because we think that Bitcoin mining can be a crucial part of the transition to renewable energy globally. And so looking at markets where renewable energy is both entrenched, desirable, but also requires propping up, we see this as the perfect opportunity to insert Bitcoin mining, because Bitcoin mining is what we call large flexible load. We can turn on Bitcoin mining, and we're talking about whole megawatts of power. In one single go, we can turn on or turn off megawatts of electricity. We can turn it off instantly if the grid needs that electricity back, or the generator needs that electricity back to supply it to the grid because the grid demand has peaked, or the grid requires it for frequency response or control. We can turn off, and then we can turn back on within like 2 minutes, and we can be back up and drawing the required amount of energy to, alleviate curtailment, to balance the grid, all that kind of thing. So if we deploy Bitcoin mining strategically with renewable energy, the opportunity is to create value for Bitcoin miners, which obviously we're very excited about as Bitcoin miners, but value for renewable energy generators who look at the payback terms of a asset like a solar farm in the decade plus length of time, where financing terms are often really marginal. You have to often get 5 or 6 banks to kind of all agree and sign off to fund these things. And then their return over a decade or 2 decades is often fairly marginal for the cost that you've kind of outlaid to build these things. And so if suddenly you build these things and the grid doesn't want as much of the energy as you had expected or projected that it would, suddenly that makes your financing a really difficult conversation, or re-upping your finance it's a really difficult conversation to be having with your banks or your other funders. So the opportunity is for Bitcoin to step in as a customer of last resort for any electricity that was going to go, wasted, and to be and to form a great partnership with these generators where we can reduce our average cost per Bitcoin acquired, and they can improve their utilization of their generation asset. Because this is the balance that we all have to strike, right? I've got $1 million. Do I buy $1 million worth of Bitcoin? Or do I find a way where I can reduce my acquisition cost of Bitcoin to lower than $1 million worth of Bitcoin at market? So this is why I personally and the team at Stackr mine Bitcoin rather than buy it, is that we can reduce our acquisition cost of Bitcoin to below what we would have paid at market.
Yeah, that makes sense. So let's just say, for example, I mean, we know that this is happening in the context of lots of the world moving towards net zero goals. So there's a proliferation of renewable energy infrastructure being built. So if we think about things like hydro, solar, you've got kind of quite big peaks and trough in terms of how much electricity is generated. What would happen if you weren't there, or when you're not there? What happens to that extra electricity at the moment?
Yeah, so great question. So yeah, so this is what we've seen globally, right? Is with the cost of particularly of solar coming down really substantively, the cost to build the cost to manufacture solar panels is precipitously falling, and the cost of things like inverters the same as the production has scaled up globally. And what this leads to, particularly in sunny parts of the world like Australia, California, Spain, believe it or not, even Germany, is kind of unrestricted growth in the volume of solar capacity that people want to inject into the grid. Huge tract of land somewhere, it's good for nothing except solar energy, and so somebody will put 20, 50, 100, 200 megawatts of solar electricity generation capacity on it, and then stick it into the grid, and the grid has no structure for kind of declining that. In a lot of places, new capacity is seen as good capacity. Doesn't really matter the generation mismatch to the demand structure or the demand curve of the use of the electricity. And so what we see globally now, especially in these places like where I've listed, is that during the day you get an oversupply of solar electricity or an oversupply of solar and wind electricity, and the grid can't take it. So the grid does something which is called curtailing that energy, which is they say to those generators, we can't take it, we won't take it, and we won't pay you for it. So generators who are used to having been paid a spot price or a agreed price for your electricity that you generate are suddenly seeing returns in the 0 or negative range for their electricity. And so for generators, that's an extremely hard pill to swallow sometimes, and it leads to a lot of these generation assets going bankrupt and being sold to somebody who can fill that gap with an agreement somewhere else on the grid. But at the end of the day, that curtailment still exists. The grid can only, transmit so much energy, because if it has too much, you get if the grid has too much or too little electricity, you get the same kinds of issues, which are blackouts, brownouts. You have frequency control issues, because a grid has kind of a heartbeat, which is its frequency, and it has to stay within 1% of that. New Zealand, we have 60 hertz. United States 50 hertz. Most of the world runs on 60 hertz. If the grid gets above or below 1% of that, it causes the protection circuits across the grid to trigger, and you get blackouts across the grid. So that's why you can't just allow that energy to flow and to have it go for really cheap or something like that. So Bitcoin mining can sit at these generators or at strategic spots on the grid and soak up that electricity that was otherwise going to be going for 0. And so, the simplest thing, or the simplest way to explain Bitcoin mining, is that we convert electricity into money on the spot through computers with heat as a byproduct. But but that's the opportunity, and so that's what we're looking to do, or we are in process of doing in several markets around the world, is to position, 20, 30, 40, 50 megawatts of Bitcoin mining at places where energy is curtailed, and to buy that energy at very, very reasonable prices from our perspective, and thankfully non-zero prices from the generator's perspective, and to soak up that electricity, monetize it for the benefit of both parties, and the grid gets to continue to see high utilization rates, across the day, and to manage its own utilization without having to worry about the effect or the downstream effect on users or the upstream effect on generators. The other way that Bitcoin mining can help the energy transition is that at the scale of the grid, and at again, like I say, at strategic points on the grid, we can operate as what's called demand response. So demand response is a relatively new concept in grid management, but it has been described as like a runaway success, particularly in the United Kingdom, where they actually have quite high growth of renewable energy, and in the early stages of the recognition of that growth in renewables, the grid operator there decided that it was demand side that would be the best way to manage it. And what that means is you get a whole bunch of variable renewable energy, right? Wind that blows when it's blowing, sun that shines when it's shining and generates electricity at that time, and you stuff the grid with it until it's full. And you find people who will operate as useful offtake, that is, you take energy off in large amounts, who can turn on or off more or less capacity when you need them to. So at the moment, what you have are grids that are built for peak times, but they only operate at a certain capacity, so that when the demand comes up, you can stick a bunch more electricity on and keep that frequency at the right level. And so what we see, in New Zealand, we have the Huntly power station, which is, kind of a peaker plant for Auckland. When everybody gets home, plugs in their electric car, turns on their oven, turns on the heat pump, from 5 o'clock onwards, energy, consumption or demand goes through the roof. And what has to happen is that Huntly has to turn on one of its coal-fired furnaces to generate electricity to manage that demand, to provide for that demand. And then at night, after 9 p.m., everybody goes to bed and starts turning stuff off, and the demand goes down, and they can scale that back. But in the meantime, you produce a whole bunch of carbon emissions, right? Just to charge electric cars, to power the technologies that are supposed to be driving the electrification, that are driving the transition to renewables through the electrification of things that would otherwise have been like off-grid consumption, like petrol, fireplaces, that kind of stuff. You bring all this stuff on grid and you power it with renewables. That's the goal. But in the meantime, we have grids that are kind of underutilized. If we utilize the grid fully and we stuff it full of renewables, and then you have flexible users like Bitcoin mining who can go, okay, we're happy to turn off because the pricing is too high, or we'll be moderately compensated for turning off for this amount of time. You can maximize the capacity of the grid. You can address the demand that the grid is built for, and you don't have to rely on fossil fuels, which are faster to respond and can respond on demand to supply and consistency on the grid. And so demand response is one of the ways that globally Bitcoin mining can help with the renewable energy transition, by being that customer of last resort, or by being a flexible user who turns off when there's too much demand from other users on the grid.
Yeah. And playing a devil's advocate view, what would stop like batteries soaking up the electricity that is there?
And this is the discussion that we have with generators when we come to them with this proposition, They say, well, yes, there's currently an issue with curtailment, but we're going to stick in batteries in 2 years. And at night, these batteries, instead of $0 for this electricity now, when we let the batteries onto the grid at night, we get $200 a megawatt. And that's fantastic. And they should absolutely do that because, first of all, battery storage is one of the key technologies that will allow renewables to scale. Because if solar is going to become one of the dominant ways that we generate electricity on planet Earth, which I think probably it will, obviously that's really specifically time bound. It's no good. It's only good from 8 a.m. to about 4 p.m. and it's no good at 4 a.m. And so batteries and the ability to store and release that energy when it's most needed is really great. The issue with it is that, first and foremost, you can only charge a battery once. So if you've got a 4 megawatt hour battery and you've got 8 hours of curtailment, you've still got 4 hours of curtailment after your battery is charged. Second is you can only discharge a battery once. So once that electricity is gone, you still need the electricity on the grid to supply, first of all, to manage frequency, of course, but also to supply the grid. So batteries fill a gap, but they're not the be all and end all of saving renewables sort of from themselves, from the demand, from the supply pattern that they generate at. Second or third, depending on how you structure my answer, is that when batteries are widespread, you're not going to get $200 a megawatt hour for releasing your battery stored energy at night. In fact, in some of the markets that we're talking about, the projections are that you're going to get curtailment at night as well from batteries, because there'll be so many batteries on the grid with a need to release that energy before the sun comes up the next day and they have to be charged again. You'll have to release that energy at arguably curtailed rates or negatively priced rates. So you'll have to pay somebody to take that electricity off you. So that's another issue that battery storage will have to contend with, is that when it is widespread, it will bring the price of battery stored energy down as well. Fourth, you don't build, just like you don't build a road for 5 p.m. on the Thursday before Easter, when everybody's driving south from Auckland to the Batch or north of Auckland to the Batch, you don't build battery storage to capture the maximum of your curtailed energy, right? If you're curtailing 60 megawatts at your highest peak curtailment hour, of your highest peak curtailment day, of your highest peak curtailment month, that's your maximum, right? That's the maximum curtailment you're going to get. 6 months later, when it's winter and you're not seeing such high solar energy irradiated on your generation asset, on your solar plant, you might only be curtailing a sixth of that. So you don't build battery storage to capture max curtailment because you're overcapitalizing. You build for the average curtailment, which means, again, there's still some curtailment that goes on above your battery's ability to capture that or to soak up that curtailed energy. So across all of that, there's still plenty of ways for Bitcoin mining to fit into a system where batteries have smoothed the curve of curtailment, but they haven't completely eliminated it. And in fact, they may have introduced a curtailment issue somewhere else down the line in terms of the time of day that energy is or needs to be released. And so again, this is the discussion that we have with these generators in these countries that we're talking to them about, as they say, well, you know, we're going to have battery storage, and we say, well, that's great. We'd love to put Bitcoin mining in the short term. And then when your battery storage goes in, we'd love to look at what's left over then, and we can pull what you don't need of our mining off the site, and we can keep the stuff that's still valuable for monetizing the leftover curtailed energy. And one of the things that we see is that because generators are very and as for reasons I've already outlined, are very conservative in how they approach deals, financing, agreements. The diversity of having an external revenue stream from Bitcoin mining is also quite attractive. So you can hedge your battery storage revenue with some other revenue from Bitcoin mining, which you're now quite attracted to, or quite attached to after several years of seeing your curtailed energy monetized, and your ship being kept off the rocks by someone who buys energy that you couldn't sell otherwise.
Awesome. And I know one of the geographies where Bitcoin for this purpose has been used successfully is in like Texas.
Yeah.
Can you maybe walk the listeners through, how long that's been going for and what some of the learnings have been from that?
Yeah, yeah, Texas is a great case study because in typical Texan fashion, they are their own grid, and they're an island grid in the national grid of the United States. They have maintained their freedom, for better or worse, from everybody else, and they've got just the Texas grid, which is called ERCOT, or is managed by an entity called ERCOT, but it's the ERCOT grid. And so it's kind of a test case because, again, it's one of those things that about Texas, that, one of the surprising things about Texas is the immense growth in renewable energy capacity there, both solar and wind. So Northwest Texas has massive wind reserves. And so huge wind farms, gigawatt scale wind farms have been going up for the last kind of 10 years. And obviously being Texas, there's a huge amount of solar being deployed there as well. And so the ERCOT grid, with this massive increase in the volume of variable renewable energy, has stepped firmly into the demand management side, the demand response opportunity that Bitcoin mining offers. And it also helps that that's the home of some of these kind of mega miners like Riot and Marathon, where they have gigawatts of Bitcoin mining capacity, which they can use as that flexible demand for these programs. So yes, so with really, really high penetration of renewables, you get very, very lumpy supply. And then with very, very severe weather starting to occur in Texas, winter storms and hurricanes, etc., which many of the people who live in Texas might deny the causes of, but no doubt they're starting to occur there. One of the real kind of demonstrative examples of the value of Bitcoin as large flexible load has been the ability of Bitcoin mining to curtail up to 3.7 gigawatts of electricity on demand at the request of the grid operator. And so that's enough to power hundreds of thousands of homes, hospitals, all that kind of stuff, and to stay off if the transmission infrastructure is damaged in winter or storm events. And so there's been some really great literature that has come out of groups like the Satoshi Action Fund in the United States. Actually, Satoshi Action Education is the entity that develops that stuff, but also with ERCOT as co-authors on those papers to demonstrate how it works, why it works, and the positive effects of using Bitcoin as demand management. And then the other thing is that, Texas small towns were part of that, that apocryphal kind of American rural or small town story where large industry has kind of moved out and left kind of gaping holes in employment and kind of social in societies in Texas. And what Bitcoin, so a great example is there was the Riot blockchain facility in Rockdale, Texas. Rockdale used to be the site of a aluminium smelter, which New Zealanders will all understand the significant power consumption and requirements of an aluminium smelter, given that Tiwai Point consumes 17% of all of New Zealand's electricity, all in one spot. And the New Zealand government in the 1960s effectively built a grid-scale hydroelectric facility just to power it. So when a aluminium smelter moved out of Rockdale 20 years ago, it left behind all of this energy infrastructure, which there's effectively no other business that can utilize it in the way that Bitcoin mining can. So Riot comes along, sets up a 800 megawatt, very nearly gigawatt facility of quite a high-tech deployment as well, an immersion cooled facility, which means rather than using air to cool the miners, they immerse them in mineral oil, and then the mineral oil is rinsed over them to keep them cool, and then taken outside and cooled in a heat exchange. So it's a lot quieter, it's a lot more efficient, less wear and tear on the hardware, and you can do all sorts of interesting things with clock speed and stuff on it. But what that meant is that a town that had kind of been foundering in the past now had a new employer for both skilled, semi-skilled, and unskilled jobs, and a pathway for people to move up the ranks of unskilled through semi-skilled into skilled opportunities within that company. And there's actually a great letter from the mayor of Rockdale, which is worth Googling, where he talks about this as kind of the history and trajectory of the town. Like, he took over a town that was, on its knees, and then a large employer moved back in after decades and has kind of turned the fortunes of a town around. And Riot get to participate in this demand response for the entire grid of the entire network. So Texas has been a great case study, which is, we bring that academic literature through into what we're doing, because this is something that my background as an academic I find really valuable, is that when you can rely on the peer-reviewed findings of others, you can bring that knowledge into what you're doing really comfortably and safely, because it's sort of been passed through the matrix of analysis and acceptance of being well-developed insights, rather than just kind of spurious best practice that sort of comes out of conferences and discussion and that kind of thing. So it's been a massive boon for the industry to have like a really substantive case study that we can all look at for sort of best practice in Bitcoin mining.
Awesome. So what's your vision for Stackr? Like, what would you like Stackr to look like in 5-10 years from now?
Yeah, great question. So, we want to be really deeply entrenched in energy markets around the world. We want to be working across different countries and different types of deployment, that all of which help the renewable energy generators in that area, whether we're working directly with them or whether we're working with the grid, to make sure that as much renewable energy is monetized as possible. We can't promise that we're going to monetize at $200 a megawatt like peak demand battery storage might in places around the world at the moment. But what we could offer is good returns for energy that would otherwise be wasted, and to offer those grid balancing services to grid operators so that they can also scale and improve the operation and the performance of grids. Because this is something that we see in the countries that we go to talk to. If they're slightly lower on the development index, often grids are kind of, for lack of a better word, have kind of collapsed. Because if they're not transmitting energy where they're supposed to be, where it's supposed to be going, even if it's technically feasible, then they're kind of not doing their job. And the reason they're not doing their job is because there's a lack of business case to invest on the part of the government, or there's a lack of funding from the government to do so. But if there was a buyer who was prepared to subsidize what we call the systemic costs, which are the costs of transmitting electricity, through being a large buyer and also operating as demand response. That's another way that we could look at bringing the performance of entire countries' grids up. So that's where we'd like to be, is kind of operating at that scale, both at the scale of generators who, might have some electricity to sell at low rates because otherwise it's underutilized or not utilized at all, but also on grid where it makes sense to help transmit renewable energy to where it needs to be and to keep that pricing for the end user as low as possible.
Awesome. And Stackr is raising capital with a wholesale-only debt offering through DSG. And, of course, any wholesale investors that want to learn more about the offer can kind of head straight to the dsg.exchange website to kind of qualify and read the full IM. But how can people get in touch with you, Simon?
Yeah, so you can email me at simon@stackr.co.nz directly if anybody's really interested. I'm also on Twitter at Simon O. Collins. The Stackr website is stackr.co.nz. We're interested in hearing from anybody who's keen to talk, collaborate, has an opportunity, is interested in what we're doing. So, definitely keen for people to reach out.
Awesome. Well, thank you very much for your time, Simon. It's been a great chat.
Thanks, Ryan.
And look forward to seeing where Stackr takes us. Very, very exciting journey.
Thanks, Ryan. We're excited as well. Thanks.